Hey guys, what is up? Good morning, everybody. Good morning. It is 8:53, a little bit early for me, or earlier than yesterday anyway. I don't think I stayed up as late last night as I did. I did stay up pretty late though. Gosh darn it, I just remembered. I'd suppressed the memory. I was trying to do something and then I had a technical problem and oh well. All right. Well, let's check this stuff out, see where the market is. I guess we could go get the guys in Discord. They're fine. Let them, they don't care. Oh, there's one of them that showed up. I mean, they care, but they need to do their trading and stuff. I'm not going to go bother them. Uh, let's look at the market. We'll start with the ES. It's the first thing I looked at when I got up, and it was doing better when I got up. But it hadn't. Well, no, it'd been trading all night. It was just up here when I opened it. So I guess the number went well this morning, CPI or PPI, whatever. I saw on Discord it was roughly in line. The market's not reacting too badly. So we'll take that as a victory. My license didn't come today. That was not a victory. I got some swag. We're gonna have an unboxing here in a little bit. If I remember, I'll probably forget. But one of the companies sent me some swag. I figured we could look at it together. I was hoping they would just send me whatever, because usually you go to New York, they print up stuff. Like I have a backpack right there that says Max Convexity on it and Yield Max and other stuff. They print up stuff with your station's name on it. So when I was telling them I couldn't go, I told my sponsor, not Jay, the guy that's in charge, the guy that works for Jay. I said, hey, sorry if you guys have swag for me, but I'll Venmo you if you want to ship it to me. He didn't say anything. He told me he was sorry I couldn't make it and let me know if I did end up making it, and I could meet him at dinner and that kind of stuff. He was nice, but he didn't say anything about the swag. So I didn't say anything more either. Well, anyway, I'm watching the internet and I guess this year instead of J dolls, they gave out 8-balls. Well, guess who's sitting at the airport with an 8-ball in each hand? Freaking Coach is. I guarantee you, Coach snagged my 8-ball. Coach, you got to that damn Coach. Gosh darn it, Coach. Coach snagged my 8-ball. Gosh darn it. Anyway, I don't get it because I didn't go. You gotta go to get the 8-ball. I'm fine with that. The 8-ball was you just shook it and it told you what Yield Max fund to buy. All right, we got a bullish up gap this morning from yesterday's close though, which is good. Let's just go put that on the chart. But lately, let's see what happened. The last time we got a little down gap here, it's kind of respected it. I mean, I don't know. Now we got on the other side of it. We're gapping through a gap, it looks like. And then this morning we had let's put this one on here. I just like to keep track of the gaps. I think if you knew nothing else besides the gaps, I don't know. You also have to just kind of pick up on the vibe of the market. You can do that from getting on the internet or watching CNBC. But I think that the gaps and just the general vibe of the market will get you. Still can't make money timing and guarantee that you can make it, but there's no way to prove that you could have an edge. But somebody that's observant and I think can do better than average using just gaps and the general kind of vibe of the market and selling options. You got to then if you're bullish, you find out to sell a put or do something where you get a little premium in, or you're bearish, you sell a call or do something somehow. You don't have to sell a call when you're bearish, but you know what I mean. So, and then somehow put some type of premium collection or something on top of it. Sometimes it's fun just to take it, or not fun. Sometimes it's good just to take a shot. Heck, when vol's so low as it is now, you might as well just take a shot, right? All right. Well, that's what I say sometimes. QQQ. I do think the guys at Tasty Trade are too in love with Tom and just too in love with selling premium. I mean, what does he know? He's only had 50 years in the business. I just think you got to step up to the plate and you got to hit for distance occasionally, right? I think so. Maybe you sell premium 80% of the time. But I think sometimes you just get up there and you take a shot. All right, so that's the Qs. So the Qs, I didn't put this gap back here, but we'll just put it in right now. All right, well, look at all those gaps. This one they revisited. This one wasn't a huge one. They revisited. You got a couple of shots at it. This one you didn't get another shot. Sometimes you get gaps and goes. You got to just go with it. No, I'm just joking. If you bought every gap you saw, you'd be freaking down on Lamar Street in Austin begging for food or begging for, beer money at the 7-Eleven. All right. All right. So what else is going on? NVIDIA's up. I mean, my gosh, God dang it. Why didn't I not just, gosh darn it. I always say this, but I want to just get some kind of simple trend following thing and do it and stick with it. I do it all the time. I'll go, okay, I'm going to follow this trend and I'll buy calls and it won't work out, or it will work out. And then next time it'll say to buy puts and I'll decide not to, because it'll give me a sell signal that I'll think it's not really going to go down, or, but gosh darn it. Options are a great way to trend, or you could use them to trend follow too. In trend following, I say you just probably buy premium, but you could sell premium too. You could sell puts behind it. Either which way. All right. Well, that's really nice. Look at NVIDIA catching 2%, NVDY catching 2%, NVDA catching 3%. All right. Let's look at the high yield technical analysis. They're supposed to auto sort. I got up this morning. They were not auto sorted. I don't know what in the heck is going on. I mean, I guess I just need to take S bar and XV out because, I definitely do. Because they aren't even working right now. And then just delete those two rows. Maybe that would help. But it ought to stay. Yeah, now last night's coming back to me. I was up really late again. And my headache's coming back. And oh my gosh. All right. Maybe I'll show you guys what I was working on whenever after we open the swag and look at the other stuff. All right. Well, anyway, here we have it. And I've been thinking a lot. I still feel guilty about not being able to please everybody. I'm definitely a people pleaser. If I hate when somebody's upset. Even when it's not my fault, I'll try to think of some way to make them not upset. Even if I think it's stupid, I just hate to see people disappointed. I hate to see people disappointed. I don't know. But, it is called the max factor. And I'm saying right now that I think the ones that are tops on here are better than Misty. I know that's blasphemous to say Misty's based on one stock. I have a few shares of Misty. I had a lot of Misty. I had like 10% of my portfolio of Misty. I don't have a problem with Misty. But I have ULTY. ULTY has, I don't just use the max factor. I also use discretion. ULTY is nowhere close to being on the max factor, but I love it. And I think it's, because I like the option strategy and I like how they're selling. I need that. I like to have that in my portfolio. But it's probably never going to make the max factor, because the max factor is I should call it the sissy factor, or the scaredy cat factor, or whatever. We could think of other funny things to call it too, I'm sure. But I mean, these are good, solid. These are good, solid stocks. Soxy, Biggie, Sput, MSFY, SPY, GPIX. Now, granted, I don't have any of those, but they're good. These are good, solid stocks. KQQQ. QQQI is as good as, come on, triple QI. FEPI. I was wearing my FEPI shirt this weekend for a couple of days, Saturday and Sunday. Anyway, QILG. Okay, I get it. I get that part of it, but that one's maybe a little too steady, but if you want some excitement, I mean, there's NVDW. It's number 13 on the list. Let's look at NVDW against Misty. I think the list just reflects, and that's kind of what I want to do. I wanted to not encourage yield chasing. The yield is basically false advertising. Not really, but I'm saying, but to especially to people that have never been in the market, they don't understand. I've been doing this for years. For back in the 90s, there's always been things called yield traps, always, since the beginning of time. What they were is some crappy pipeline company or something that was paying out. I'm not saying crappy, but maybe sometimes a company in distress, or a pipeline company, or some kind of infrastructure company that was paying out at a rate faster than they were bringing money in, and it was a dividend trap. People would see a 12% coupon or a 12% dividend. You used to have to read the paper, and it would say, one of the columns would say dividend, and it would show you, I think it would show you the dollar amount per year, and then you'd have to extrapolate it. But you'd see something paying a 20% dividend. It was always a scam. It was always a yield trap. So when these came out and people started saying, are these yield traps and stuff? I know all about yield traps. I have tons of experience with yield traps. Anyone does. It's been in the market for years, and especially because I used to sell securities, so I had to make sure not to sell any of my customers yield traps. When you sell securities, people will come to you all day and say, hey, Mike, what do you think, or Max, or whatever, what do you think about, this? And I'd have to look it up. Anyway, but yeah, yield trap is nothing new. Yield max is not yield traps. It's a different deal than a yield trap. Yield max just pays you the money they earn from the options. Yeah, sometimes that has a negative effect on. Am I not sharing? Oh, I'm sharing. Okay. Sometimes that has a negative effect on the NAV. But anyway, you guys know all this. All right. Well, so I mean, I think these are pretty darn good stocks. I mean, look, Maxi. I mean, I really like this. Maxi's on there. And the reason Maxi is because they return more of their upside to you in upside instead of in yield. So, I mean, they do pay like a 25% yield, but they have a lot of, they have a lot of nice NAV upside. Anyway, so yeah, I'm just going to keep this the max factor, but I need to quit calling it the best yield max funds because it's subjective for one thing. They may be the ones that fit my investment style, but they aren't best. I'm going to start calling them out. I'm going to start emphasizing more when I do the max factor shows how I come up with the thing. And if your favorite fund isn't on there, there's a reason for it. Anyway. So, all right, we got that worked out. I thought that through. I was thinking about that all day yesterday. I love to, I want to make everyone happy, but here's another thing. If you want, just do this. I don't even have something to sort it by yield, but just don't worry about, just look at the total return and don't worry about what anyone says on the internet. The total return is all these things that I'm looking at, are derivatives of the total return, or some of them, the total return plays a part in it. So just look at total return. And don't worry about it. And yes, Misty has great total return. Don't worry about what some influencer says on the internet. You got to make your own decisions. It's just not for me. All right. Well, let's look at the buffer report. Then I'll see what you guys have to say for yourselves. I'm just glad I'm sharing the screen. It wouldn't surprise me if I wasn't because I'm tired, but I really haven't shown anything. I'm just talking anyway. I love to talk about the 90s. 90s were a good time. 90s were the best time for music. People say the 70s, and probably the 70s actually really were, but the 90s were, the 80s, no good. I didn't like the 80s for music. I mean, 90s, and I don't even like grunge. I'm not talking about grunge, although there is some good grunge. But I really like Stone Temple Pilots in the 90s. There's a 90s music. 90s was a kind of a golden age of music. I'm into R&B and soul a lot too, and there was kind of a resurgence of neo soul in the late 90s. But then you had good rock. I mean, I love the 90s. I cannot tell you how much I love the 90s music. I'd love to go back to the 90s right now. All right, let's look at the GPTY verse and see how that's going. But yeah, the 70s was actually the best time for music. It depends on what kind of music you like. If you like album rock, that's probably my first love is album rock and jazz rock, otherwise known as fusion. But I like R&B, and there was great R&B in the late 70s. I love R&B. I've always been such a sucker for R&B. I mean, Stevie Wonder, Michael Jackson, I mean, Marvin Gaye, it doesn't get any better, in my opinion. Soul music. All right, so what do we have here? Look at this, SPY-T, but the SPY's only up 16 basis points, so they should all be doing pretty well. So SPY-T's beating it, XDTE that's great. SDTY looking good, WDTE looking great, FEET 5E, FEET and 5E down, of course. They're usually down or up the most. There's JEPI down a little bit. Who cares? I mean, who cares, right? Let's see what's up the most. GPTY, heck yes. Heck yes. Now, GPTY, I love it. Not anywhere on the list, is it? So, I mean, maybe the list is bogus. I don't know. But I know why. GPTY is also on the risky side compared to some of those other ones. But I don't know. Also, maybe GPTY just hasn't performed that well yet. Why isn't GPTY on the list? GPTY is doing well. Come on, we're going to go back to the list real quick. I'm weaving back over the list. Is GPTY not, maybe, did I forget to put it on there? Well, there it is. It is 18th on the list. Okay, so look at this, $4. It's paid a $6 trailing 12-month dividend. Has it even been out for 12 months? No, but anyway, but right now that's at 15%. Or has it been out 12 months? It's 1.4% above one moving average and 6% above another moving average. It's 26%, not even NAV return, total return, or not total return, NAV return. So 26% total return. I'm sorry, NAV return, plus is paying about a 15% dividend. This is just for a quarter. So that would be a 15% dividend for a quarter is a 3% dividend for a quarter, or 15% for a year is 3% for a year. 15 for a year is 3 for a quarter, or 3.5 for a quarter. So you can figure this thing is coming in at about 20% total return, something like that for a quarter. I mean, that's pretty dang good, right? Something like that. I just did that in my head real quick. It's beating XPay. I know that freaking dog. Of course, the XPay, I guess its magic comes in its tax benefits. And a lot of these have tax benefits, and this does not consider the tax benefits. This is technical analysis. All right, so back to the other one. But anyway, I like to see that, of course. GPTY, of course, YQQ's down a little bit. Look at Z-Vol bouncing back. So that means volatility must be coming down this morning, which it has. Volatility was probably up in front of that number, CPI, PPI, whatever. Look at Bali doing well, and look at Clip killing it. All right, so let's go over here to the max factor. Not the max factor, the yield max buffer. That's the old max factor. Let's look at this one. Look, Mister's number one on this one, on the composite. So maybe I need to start doing this one. There we have it. But that's Mr. Stock. I used to have to look at the stocks too. I used to compute the max factor where you had to know the parents, a metric or two on the parent. So I would put the parents on here too. So of course, Mister's the number one because it's actually stock. I mean, it's stock that's been going up a lot lately. Same thing with NVIDIA. But yes, Misty, and this old formulation, and see, I was trying to save everyone, trying to help everyone back here. I remember this formulation. I had a safety and then I had a yield, but on the safety one, it would be, anyway, it's whatever. And then I had a composite that was supposed to be an overall. But anyway, all right. Well, I tried to do it. Who has some of this stuff? CAIE. Marcus, is that you? Does anyone in here know what an auto callable is? It sounds, for all intents and purposes, kind of like an option, but it deals with bonds. And they also have some kind of element of like a barrier option in here, kind of like that S bar that I just knocked off the chart. Somehow it's a bond, but it's tied to the market. I've heard of equity linked notes before, where, it's a bank note tied to equity. This is maybe an equity linked bond. I mean, I'm just trying to think in broad terms. I'm not as you guys know, not a bond guy, but auto callables. So all this is, what they do is they have a laddered maturity of bonds. It looks like they go anywhere from 4 years. Those are 4, 5, 6 years, 3 years, 3 years. Looks like they go out 3 to 4 years. They do one every week. And watch this. Okay, you can click on the dot. Okay, so this one ended up paying a 14.8% coupon. I guess it pays a higher coupon because it's linked to equity. And it's like a barrier option. And should the market crash and it goes under the barrier, then I think maybe the bond is called or maybe isn't called and you lose money. I think as it's called, that's the normal thing to happen and you make money. But it's so zone coupon called. Maybe this one's already been, but anyway, but they have a bunch of these and they say they can pay 14% or something. That's about what they're paying. They have 66 of these bonds. Weighted average coupon is 14%. They haven't paid a distribution yet. Anyway, my brother-in-law's in this. Marcus is in this, I believe. I believe my brother-in-law's in this. He likes it. He asked me what I knew about it. I didn't have anything to tell him. But this guy, evidently, this is one of their bosses at Calamos, and he's into this kind of stuff. I was reading about it yesterday. JP Morgan, these are swaps. It's not equity linked notes, but JP Morgan's going to be on the other side of the trade. It says the president and CEO of Calamos, a leading alternatives manager. And I would say, yeah, Calamos is maybe 4 or 5 in the alternative space behind, of course, some of the big ones that we know about. The fund's designed to provide high, stable monthly income through exposure to a laddered portfolio of auto callables, transforming a complex institutional market into an accessible, liquid, tax-efficient ETF solution. JP Morgan will serve as the primary swap counterparty. See, this guy made an index. There's some index somewhere. Mercube Indices, index provider, and then they've licensed the index. And now they've made this fund. I was going to show you there's a chart somewhere that I wanted to show, but I guess I'm not seeing it. Anyway, okay. Well, back here, let's look at the yield max buffer report. All right. This part, look at this. AMDI or AMDY catching about half the upside, which is pitiful. Come on, AMDY. That's why I hate you. You do a terrible job. You guys are all doing a terrible job this morning. I don't see really much upside other than Snowy. Snowy's killing it, beating the parent, pulling the Menendez brothers. Unfortunately, Murney's right now at this point in time outperforming on the way down, as is Abney. All right, I'm done. I'm tired talking. You guys, what do you guys want to talk about? Well, I'm going to open this. I'm going to see what you guys are saying. Hey, Marcus. Okay, let me get back to the start. Susan, thank you for being here. Marcus, Susan, what are the requirements to be? It has to be out a quarter. And that's the reason is I really focusing on that quarterly time frame because it's trying to be a trading index. I want what's hot now. And I did it on longer time frames, and you have to write a bunch of good stocks down. And I don't want to do that. During the bad times. In fact, I really allocated my first model portfolio based on an early version of the Max Factor. I looked at some of that stuff to inform me. But in any event, okay, so check QUSA when I get a chance. It's your new favorite. You believe 15% will be the new 8% norm. Yeah. So that's kind of what I'm working on last night. I think that's about the physical max is 12 to 18. The max without just blowing the account up. In an index, and I'm talking in an index. Now, a single stock can pay more because single stocks are potentially more volatile. But in an index, I think 12 to 18 is a sweet spot. And you do see a lot of ones right now that make that much and have great NAV performance. But I don't know if it's really because they're so smart or because that's just kind of the physical. That's just kind of the physical limit. Of course, I don't have a knife. Gosh darn it. I have a fork right there. Anyway, yeah. Let's look at QUSA. Well, let me pull it up on the screen. Let's see how it's doing. So I think QUSA is too new. Now, these guys are good packers. This is not a great unboxing video. I need to work on my unboxing technique, don't I? Look at this. Would you take a look at this? I like this. And I got a note from Mr. David. Thank you for supporting Blocks and X Funds. We appreciate your interest in our funds and hope you enjoy representing your investment. Well, that's just wonderful. And now I need to buy some shares in it. I mean, I'm a big believer in the lightning spread, but it tests about, I mean, based on my test, and I don't know where the strikes are, it tests about like, I mean, just by the structure of it, you would think it has extra upside. And because it's just stock and then plus a put spread. So, but it doesn't, it tests all right. I mean, covered calls test all right. Poor man covered calls are some of the best back testing things you can do, I think, when you don't use stock, because you can do it for, like a fifth the price and you get better. But, so yeah, it's, maybe a poor man's covered lightning spread it can be a good trade, but anyway. All right. Well, how does it look? Some hats are too high in the middle, and I don't really like the way they sit. I like the ones that are the ones like I usually wear that are the kind of the flatter ones. But anyway, this is wonderful. Thank you, David. If you're watching, thank you so much. All right, what else is going on? Let's see what's going on in general. Maybe there's okay, we got distributions for YBTC and YBTC and YETH. Okay, well, that's wonderful. Maybe we should go look at those. And then MST made a distribution. Okay, MST's distribution is 85%. I really don't know that much about MST, but all I want to do is if leverage is that big of a deal, it ought to spank MSTY. It ought to either have a higher yield or better NAV return, depending on how they do it. But it ought to, it ought to do better. So I'm hoping to have enough time to look at that. I'm hoping to put that on the max factor and put it next to MSTY, and we'll see how it does. All right, so on QUSA, let's go look at QUSA real fast. So QUSA, they actually they own the stocks and they sell covered calls on the stocks themselves. I like the ones that just own a basket and sell covered calls on the SPX, and they own a basket that represents the SPX. I just think that's a better plan because that old SPX is so liquid, but the SPX has a lower IV. So if you use individual stocks out of the SPX, you may get some with the higher IV, some with the lower. Your average should be about the same, but it depends on what stocks you choose. These are Buffett stocks, so I bet these are all low IV. It's amazing they can get 15% out of it, but there's Oracle in there. Oracle probably has pretty good IV. I mean, I've traded Oracle before, and I like to trade Microsoft. Microsoft's a good, I don't like the company, but it's a good trading vehicle, in my opinion, especially before it was 500 a share. I liked it better at 200 and 300, but it's fine. Cintas, Illinois Toolwork. Visa is probably not a bastion of volatility. Fastenals. Anyway, CME Group. Boy, look at that chart pattern. Look at that wedge. Atomic wedgie is what I call. That's called an atomic wedgie. All right. I'm running out of stuff to talk about. I appreciate you being here. I'm going to see what else you guys have to say. And I could show you what I was working on last night, but you guys don't want to see that. Hey, Dan, what's up? I appreciate it. Yeah, I'm bloxing. I did an unbloxing. It was the unbloxing. But this, yeah, this hat, it's like a trucker hat. It's like those hats that old man wear. And I'm saying old man because I'm thinking, but yeah, I am an old man. I know it. But I'm thinking 20 years, 30 years ago, and you'd see guys and back in the 70s is kind of how it was in too with the big. I think it's coming back. I mean, I'm just glad it doesn't have the flat brim. I mean, I'm definitely not a flat brim. I'm definitely not a guy that likes that look. But I mean, anyway, I need to shut up. I don't want to hurt their feelings. I don't want David to think I don't appreciate it, but he's not watching. But yeah, David, if you're watching, I appreciate it. I'm just joking. All right, guys. Good morning from the West Coast, Norman. Like I say, I've run out of stuff to talk about. You guys don't want to hear about my back testing. I'll show you one thing, though, just because I work so late on it. Here's what I'm working on. I can't show you the details, but I want you guys to know I am never around, or not lately. I've got to get this project finished. All right, this untitled secret spreadsheet right here. Jackson, what are you doing? Okay. See this sheet one. These are all different. These are all back tests. So I go into the Tasty back tester, then I download the trades and then I analyze them. And I was having AI do it, but AI has not been doing a great job lately. Well, sheet number 7, the 7th one finally yielded some good results. So this is a 5-year test. And granted, this test is the numbers are way too high, because the past 5 years has been really good. It's a bullish strategy, just like all my strategies. It's been a really good 5 years. So this one is up 100%, 150%. And whereas the SPY's doubled in the past 5 years. I mean, this test literally went from 716 5 years ago to 716 yesterday. And the total return is, you can see, right about 150%. The yield was 1% a month. And I was trying to represent that down here, but anyway, let me get this off there. But yeah, it's 1% a month. But the NAV, more importantly, what I was trying to do is invent a strategy where the NAV never goes down, where it only pays out at profits. And that's hard to do because you don't have profits all the time. But I was using I'm looking at the rolling CAGR and adjusting based on there, or just doing it as a target fund. I just tried 1% and it worked great. I tried 1.5% and it worked also, but at one point the NAV was down like 7 or 8%. In 2022, the NAV dropped 7 or 8%, but then it ended up rallying. But anyway, so NAV return right here, you can see it on this one. And these are months. So 1, 2, 3, 1, 2, 3, 6. So here we are, by 7 of 2021, the NAV's up 6%, and you're getting and there's your yield right there, that 99. That's the actual, that's the yield. So it's just steady as can be, steady. But because it's so steady, it doesn't have a lot of the trade itself doesn't have a lot of upside. But if it outperforms SPY, I mean, because if you add up all these NAVs, if you follow it all the way through, or I'm sorry, not all the NAV. So the last column over here is total return. You have a cumulative dividend, and then you have total return. Well, the total return, I said 150. I'm sorry, that was another test. On this one right here, the total return, because this one's super steady, was 114%. But I'm telling you, the total return for the SPY over the same time frame was 100. So this outperforms the SPY, but just by a little bit, by 14%, and pays a 1% dividend the whole time. So that's what I'm trying to come up with. So the people that don't like the max factor also aren't going to like this test. But there are some people out there that want that just want a super steady fund, that they don't ever want to lose NAV. And I get that. I'm trying to invent a product for you guys. All right. And we'll see. We shall see. All right, guys. I have to have something to keep me busy and off the street, right? All right, guys. I appreciate y'all for being here. Thanks for sticking around. I can't believe there's 7 of you guys. I mean, that's awesome. That even I went through the nav talk, stepped through the whatchamacallit, the back test stuff. But anyway, all right, guys. I appreciate y'all. Oh yeah. I'm sorry. See your previous comment. Okay, yes. Okay, auto callables are just basically dynamic barrier options. CAIE just ladders them every math, which will produce above average income that protects us as long as the NAV doesn't drop 40%. So that's my only problem with the whole barrier option industry. I want protection when the market's down 40%. But anyway, that may be the wrong way to think about it. But I like something called buffer CDs. Now, a buffer CD is just a put spread risk reversal, or it's a put. Anyway, but what you're doing is somehow you sell calls to finance puts, and it creates a barrier. In the put spread, you might have an at the money put and then a put that's 20% out of the money. Well, and that for your put spread. Well, that means the way they structure it, and then they sell the call to pay for that spread. That what happens in that case is if you're down, or let's just use a 40% barrier, because they do have some. So that means if the market's down 39%, you're down 0. If the market's down 40%, you're down 0. If the market's down 42%, you're down 2%. It means you still lose money, but you don't start losing money till after the barrier. Kind of the same way the 3-leg risk reversal works, and go figure, because it's the same basic trade, or it's a similar concept. But you have a buffer. Now, barrier options, you can be down 39% and you're down 0 the way I understand, but then you hit 41% and the fund would be down 41%. Now, yeah, granted that shouldn't happen, but that's the one thing I just can't get my head around that. So I almost think I'm thinking of it wrong. I almost think that, but that's just the thing I can't get my head around. So anyway, but on this, okay, so here's the other thing. If it's one piece in a 20 high yield income portfolio, heck, it's fine. I mean, if the market's down, it's down. It's just a feature of it. It's fine on that one. But I'm just saying, I wouldn't want my buy and hold stuff in a barrier. The barrier options, I want protection at that kind of level. A real common barrier, I don't think they have one, or buffer. I don't think they have one that goes out 40%, but you see them all the time. They're 9%. Calamos has them 20%. Meaning, the market could still drop, but if the market drops 20% and you have the 9% barrier on, you're only down 11%. The first 9%, you didn't feel any of it, and then they have 20% buffers, so the market has to drop. If the market dropped 40% and you had a 20% buffer on, you would only be down, you would only realize 20% of that loss. That's more what I like. And so I almost wonder if I have barriers wrong in my head, and maybe they are really just another form of a buffer. But I've read it over and over again. I've asked AI. I've asked smarter people than me. We'll ask Jay next time. I don't want to ask Jay because it's not his product. Hey, Jay, explain to me how the barrier option works. Anyway. But so, all right, guys, let's see what market's saying. See your previous comment, but that's the trade-off, Max. The income will be, you're right. The income will be higher because it has that black swan risk, or it has more. Yeah, no, I get it. I'm just a scaredy. And it's fine. And you could think of it like a buffer because it will have the effect of buffering small dips. And 20% isn't a small dip. So the other thing I'm thinking, though, with the barrier option itself is if the market's trading and the market's down 39%, these ETFs trade freely. And even though the barrier option that won't get called till it's down 41% or 40%, won't the NAV of the ETF be declining on the way there? Because people know that if it hits 40, then it realizes the whole thing. I mean, I don't think the NAV's just gonna, I don't know. That's something, people will anticipate, hey, we're getting close to the barrier. We're going to get this damn thing called or knocked. They call it a knock in on a barrier. You're knocked in or knocked out. We're going to get knocked in. So people market. So the NAV will be going. So I don't know how much you would actually, if you're trading these, that's something else. I don't know. That's something else I don't understand. I would think the market's efficient enough. It would know that. And it wouldn't protect you as much as people are thinking. But I may be overthinking it. All right, guys, I appreciate you guys. Now there's just 4 of you here. I managed to run the rest of everyone off. That talking about barrier options. All right, guys, I appreciate it. We'll talk about all this stuff in Discord if you guys want. If there's something I missed, I'm sorry. Hey, Norman, did I say hi to Norman? Is Norman here? Yeah, I think I said hi to you. If I didn't, Norman, thanks for being here. All right, guys, take her easy.